Obviously, we've had this huge run. We're starting to see some correction. So far, it's pretty shallow and really more, time correction than price correction. It's, very shallow. As I said, we're still holding above the rising 5-day moving averages. And as I talk about all the time, that's my key intermediate term indicator that I'm not going to short anything with it above the rising 5-day moving average, regardless of what the bigger picture says. And, the bigger picture, we had a lot of potential resistance levels, that I call levels of interest because obviously they weren't resistance. The market blasted right through those. And while doing so, they were maintaining above the rising 5-day moving averages. So I never short the rip, just as I don't buy the dip. I short after the rip has kind of turned sideways, distributed, and then turns lower, similar to not buying the dip, just buying, weakness, instead waiting for the weakness to kind of start to accumulate on a shorter term time frame and then buy strength as it emerges back into an uptrend. So, that's kind of how I'm viewing the markets. We're possibly at a transition point, meaning, we've had a huge run and, perhaps we start to see the markets pull back a little bit. I'm seeing, more short setups coming to fruition. I'm in two shorts right now, and I've got very little long exposure. So, underneath the surface, the market starts telling us ahead of the indexes what we should be doing, and then the market gives me confidence whether or not I want to, how much size I want to put into that type of scenario.
One quick question off of that, Brian. Everybody always says price action doesn't lie, right? At the end of the day, that's what you look for. What does that mean to you?
It means that there's so many opinions out there, and this kind of dovetails into what I was just talking about. Everyone knows that we've been on the brink of World War III, that inflation is out of control, that the Federal Reserve is way behind the curve, and they're going to have to raise rates aggressively. And these are all things that appear to be bearish. Yet when we started getting the bulk of these headlines, in fact, the low in the market was the day the bombs dropped. You can look at it and say that, you can be well informed and look at all this information and say, wow, this is a bearish backdrop. I'm going to short stocks or I'm going to avoid longs. But when individual stocks start climbing out of, structurally sound bases, you buy some regardless of what the backdrop is, because the market tells us first. The market is a discounting mechanism. That's one of the fundamentals of technical analysis, that the market is a discounting mechanism, meaning it discounts what's known and looks ahead 3 to 6 months and says, where are we going to be 3 to 6 months from now? I don't want to be reactionary. I want to be proactive. And if you're trading off the news, there's a great quote that I like about that. If you trade the news, most likely one day you'll end up delivering the news, meaning being a newspaper, route delivery, because you failed and lost all your money in the market listening to your opinions rather than the message of the market. The market speaks louder than the loudest opinions out there. And people will come on Twitter and try to argue with me about things when I say, here's what I like and here's where my stop is. And they can give me 100 reasons, and I simply don't give a shit if it's contrary to my position. The fact is, if I have my stop and the market tells me that I should be long, I'm going to be long until that stop is hit or it continues higher and I take profits.
Perfect. Awesome. Brian, now that we've gotten about 7 minutes in, I've had a chance to put out that tweet, just letting everyone know that we're live. Would you like to talk about what you want to discuss, and we can dive into some more stuff on the charting side?
Well, sure. Just on that, I'd mentioned it the other day too. There's a stock called Alto, and they're in ethanol and alcohol, and there's a big short position. And I saw a headline this morning about ethanol, about how the government's trying to get it back. I truthfully just read the headline and skimmed a sentence of it. I almost never read a full article because I don't want to be biased by the opinion of the author. I don't know if the author is first year out of college, just learning how to write and synthesize information. But I look at it from how does it change the perception if we get a major news source to put this out there it might bring more eyes to the ethanol type stocks, one of which I'm long, which is Alto. And I put this out there and I got all these people say, well, what about the price of fertilizer? Well, what about this government policy? Brian, here, you're wrong about this. And you shouldn't be so closed minded, when intelligent people give you feedback. And respectfully, there's a lot of intelligent people on Twitter who probably know a lot about the fundamentals and the policy and Washington and all that stuff, can run circles around me on it. But I'm an expert in price action. I've been a trader for 31 years, and this is what works for me. If people want to do something different, I never try to force that on people. I instead say, here's my opinion, here's where my stop is. I don't see how there could be any argument around that. If you manage risk and you know what works for you got to stick to your guns. And sometimes people just get so obnoxious about their opinions that I've got to block them. That's all there is to it. And they get all pissy about it and send me an email and say, "Will you unblock me? I'm sorry." It's just ridiculous. We're traders here. But, I think a lot of times what happens on Twitter is it reveals to me that a lot of people who respond to my tweets aren't actually traders. They're people who have an interest in the market. They, are have strong analytical skills from whatever industry they're in, but they're not actually traders. And I'm a trader, and I think it's hard for people to understand the difference between the two sometimes.
Okay. Yeah, definitely a good point. I think we all can agree Twitter is a cesspool and that there is much good with the bad. But yeah, totally hear what you're saying there. And hopefully the point was taken to the audience. And I appreciate you sharing it, Brian. Anything else you want to say on that?
Anything else I want to say? No, I mean, that's it. I don't want to come across as confrontational, but sometimes people just, they get obnoxious with their opinion. I'm never obnoxious with my opinion. I say, here's what I'm looking at. If I'm wrong, I'm stopped out. Do with it whatever you want. I told you what I'm probably going to do, and my opinion will change as price action does. But the news, the headlines, what Biden says or does, or what Putin is doing, I'm somewhat aware because I want to know what shapes the psychology of what I'm trading. I'm not interested in the news itself, but if I can look at it and say, here's how it's going to affect others and how they might position themselves or not do something in the market, here's how I can gain my edge. And, someone said, well, that's selfish of you to think just as a trader. I'm a trader, The person who wrote that was a cop. I mean, it's selfish of a cop to lock somebody up and, for a rule they might not disagree with, or not lock them up, and give them a warning when their job is to lock people up. So, don't be so quick to judge others. Have an open mind, be flexible. And, that's what good traders do. And it sometimes gets annoying because people get so vocal about their opinions. And again, it's no disrespect. I mean, no one's opinion in the market means anything to me other than what the market is telling me. The market will tell me if I'm right or wrong. And people say, well, I like to hear the other side of the argument. I don't. I really don't. I'm not interested. Price tells me everything. Price is truth. Everything else is opinion. And, the greatest experts are often wrong.
Well said. Awesome, Brian. Let's dive into some market stuff, and I'm going to go to Sarah first here. We've been doing a lot of spaces with Brian and Richard every single week. We're very excited to have Sarah join us. So let's talk about SPY and the Qs here to start, if that's okay, and then we can go from there.
Sure. Well, the first thing I wanted to say is I'm so excited to be here on this panel with Brian and Richard and you. Totally, majorly respect you guys. And, I'm a stratter, call me whatever. People are technical analysts, but the main point is instead of labeling us, just think of us, we are price action traders. We are trading price. So I feel like there seems to be a bit of a divide. People think that the strat isn't along the same lines of technical analysis, and it is because it's price action trading. It's just a bit less subjective, based instead of somebody might have a falling wedge or something, but that's subjective to how that trader draws it. Whereas everybody else, we're seeing the same exact price action. We're seeing the exact same candles. So that's what we trade off of. So it's just a more objective way of kind of trading it and having if this, then that scenarios and only trading price action. So with that being said, so spying QQQ, and it's funny that Brian was talking about opinions because we were, when the bottom came and the rally started, I was basically long bias from the bottom, and people are like, no, we're going to go lower. And I'm like, okay, this is a bull trap, this, that, and the other. And those are the things that get people in trouble. Their opinions. They think they're right. They don't want to be wrong. And like Brian's always saying, the chart will tell you. So our goal, so since the bottom, QQQ was weaker at the beginning of the month. It made new lower lows. SPY did not. So once we started coming back up through February's monthly price range and monthly candle, our target was to take out February's highs. And we just did that. Oh, my dog. Rocco, hush. Sorry. Come on. And we just did that 2 days ago. So we hit our long target to the upside. QQQ became an outside month, which was an awesome target, that 370 level. We played the 50% rule on the monthly candle, which is kind of anticipating an outside bar happening. So that means that that's our target, is what's that level? 370. So we hit that. So we are now seeing a bit of hesitation, like, okay, we took out February's high. Now what? So that's kind of why we're seeing a little weakness right now. And that's why all the plays that I shared yesterday were short biased, because that's what the overall market was shaping up to be, short biased. So, and I'm a day trader, so I'm always, my bias from one day to the next is constantly changing. I can be short bias today and long bias tomorrow, whatever the chart is telling me. So also today is the end of the quarter, end of the month. So there's probably going to be, I don't know, some maybe repositioning, some volatility come end of day. So something to be aware about. And right now, kind of, like I said, the month is ending. We're just kind of waiting to see what April wants to do when it opens. Are we going to open and start selling, or are we going to open and are they going to want to buy it? So that's what we look for also with time frame continuity and the flip, meaning a new candle being born. So the April candle will be born, and that's where we will get our kind of our bias, long or short, depending on what they want to do and where we are from the open. Are we higher than the open? So are we green on the month, or are we lower than we open, meaning we would be red on the month? I think that's kind of all I have to really say about the SPY and the Qs. Any questions about anything I said?
I think that all makes sense to me. I like that you pointed out that it is end of the quarter as well, and people may be doing some repositioning, and then it's important to, I think, take position sizing pretty lightly, into the first few days of April, to just see, how people are shifting for the quarter. I think you made some good points there.
Cool. All right. Awesome.
Okay, Richard, let's get you involved in this too. So we just had like 10 straight days of green, these unprecedented, well, not unprecedented, but it's been multi-decades since we've had runs like that in Apple and some of these other large caps. After those pullbacks, now we're having a bit of a pullback that started kind of yesterday in the evening and has continued into today. As Sarah pointed out, at the end of the quarter closing. How have you been approaching it over the last few weeks? Did you start taking more positions? How are you feeling right now? What's your strategy going into the upcoming weeks?
Yeah, good questions there. So first things first for traders, and both Sarah and Brian kind of touched on this, kind of situational awareness is super important in terms of knowing what could happen. Have that in mind. So given we are, we've been up so much and we're kind of as of that day, that Tuesday, we were about 5-6% above the 21 exponential moving average on the Qs. Things were getting a little bit stretched. Breakouts have been working. They had run, and the stock market kind of moves in bursts. And it was kind of getting to the point where we might see some pullback. And so far, we've kind of seen that over the past 2 days. And also that kind of coincided with an area of interest, the 200-day moving average on the Qs. So that kind of lines up with that same 370, that monthly high that Sarah was talking about. So you had some confluence. We were extended into that level and now have seen some natural selling, pullback, consolidation, whatever you want to call it. And now kind of what I'm looking for is, how do stocks respond? How does the market respond? Do we consolidate either through time or price, as Brian likes to say? And so far, looking at kind of the bigger caps, I've been really impressed with how Tesla has acted. Yes, it's extended. Yes, I'd love to see it kind of just go sideways for a few more days, but we're still above Tuesday's high. We've undercut yesterday's high, the low here. We're still above Tuesday's low, but pretty much we're going sideways today. So we'll see how that, it ends the week. But it's consolidated those gains really nicely so far. And, there's not too much evidence of sellers just yet, no huge distribution days. And I'd love to see that continue and see it kind of just consolidate through price, go sideways, set up another pivot at 115. But definitely could use some sideways action after, like you said, I don't know, 9-10 days up in a row on stock like Apple. Tesla was up, looks like 9 days in a row, then one tight inside day and continued upwards from there. So the whole market and basically a lot of stocks could have used this rest, and this could set up another move, or it could continue to the downside. We just kind of have to wait and see from this point. In terms of my action, I've been trying longs. I've got CRDO, which has been working well the past few days. But right now, I'm not too aggressive to the long side because, like I said, based on that situational awareness, the kind of risk reward isn't there because we've already come so far. And I just want to say it's great to have Sarah on here because she provides another perspective different than Brian's. Hopefully mine's a little bit different as well. But we all kind of fall back on the same kind of tenets, which is price action trading. So yeah, those are kind of my thoughts.
Perfect. Thank you, Richard, for that. Yeah, I mean, that makes sense. I like that as well, that we haven't seen those massive, sell-offs, anything like that. Consolidation is important after a period like this. So certainly don't get scared off, right, if you're in retail and you see 1 or 2 days here of pullback. Now, I do want to have the audience involved in this. So as always, we did put out a tweet. It is pinned up top. It is the first tweet pinned before Sarah's QQQ visual. And if anybody has a ticker that they want charted, you can feel free to go ahead and drop it into there. In the meantime, I already have kind of run a few scans, pulled some tickers. I have some stuff to throw out there. But I also want to hear a little bit more from Brian before I do that. Brian, I know we talked separately before, but I know you mentioned Alto, but I'd love to hear if there's any other names that you're currently in positions with or that are on your watch list and you're looking at potential entry points.
Sure, I'm short ALLY, which is I think it's called Alley Financial rather. I'm not sure how long I'm going to hold this one, simply because we're still above the volume weighted average price from the low in March, and that's down near about 43. I think it's likely it'll drop down towards that level, and I would more than likely cover most, if not all, then look for it to bounce and short the next move lower. And I'm also short Beam, BEAM. This is Beam Therapeutics. It's a biotech, so I'm much more comfortable on the short side in biotechs than long, because there's just unique risks there. It is, Beam, I looked at what they do, and they do gene editing, which is a sexy field. But the chart just is breaking down, and so I'm short there. Probably going to cover more than half of it before the close, and because it's kind of a choppy stock. And I'm in that Alto, as you mentioned. I'm getting curious again on the uranium plays. CCJ is having a good day today. The ETF there, URA, is pretty close to maybe breaking higher here in the next two or 3 days. Then you've got UEC, looks like if it got back above today's high, and Denison DNN probably needs to clear yesterday's high to get going. That's got a good longer term chart. So I've got a close eye on the uranium names, and right now that's pretty much all I have. So it's pretty light for me.
Okay. Well, here's two names to chart. So I ran actually the pattern profits of VWAP pinch right now on the S&P 500, and it looks like there's three names coming up in it. So I'd love to hear your thoughts on PFE and ATVI.
Okay, so Pfizer's sitting right on its year-to-date VWAP, and let's see if I put a VWAP on that recent low, if that's what he's looking at as well. It might be. So it's off the volume-weighted average price from the beginning of the year and the March 8th, little shakeout. That's where we have support underneath from the volume-weighted average price from those 2 points. And the resistance, I wouldn't really call this one well, let me see. Yeah, because it's going back and forth between the VWAP from not only the all-time high but the high from earlier this month rather. It's consolidating, it's building energy. The 50-day moving average will start to flatten out on Monday and turn higher on Tuesday, even if we're just sideways in here. So it's good that it's trying to find support in here. It's probably 3 to 5 days early in terms of a low risk entry for Pfizer if it's going to. And I'm hesitant to get involved early on the long side. In other words, I'm not looking to do any cheat buys and saying, well, if we had a strong market that was strong on all time frames and everything was just kicking ass, then sometimes a cheat entry, getting involved ahead of when it technically makes sense on the shorter term time frames, sometimes that makes sense. But I think it's patience in here for the next few days. And then I think he said ATVI, is that right?
Yep.
ATVI looks weird. I don't know if this is a takeover or something happened back in January, but a lot of times when you see it is or isn't.
Yeah, it got acquired, or there was a proposed acquire. I don't know if it went through. Stock market news. Do you want to weigh in on this? It was at Activision and what's been happening since. We'll see if he weighs in. I see him right now.
Yeah, well, as far as the chart goes, I mean, once there's a takeover on there, I mean, it's the ARBs take over and they play their little games. And as far as a trading stock, the opportunity is not really there anymore. I think that if you wanted to make a play in this stock, you would look at the acquiring company, but then you take on risks of, what if the deal falls apart? Is that going to be good for the stock or is it going to be bad for the stock? So there's too much unknown here. I would avoid both ATVI and the acquirer.
Okay. Thank you, Brian.
Sorry about that.
All right.
Just to kind of build off of Brian's point, there was another report that came out today talking about some senators were wanting to stop that deal. So, just uncertainty, as Brian was saying, is definitely around this play.
Got it.
I mean, and Gov, you can I'm sorry for interrupting. A lot of times when you see a big gap up like that and a tight range for more than a week or two like that, it automatically raises my suspicion that maybe there's a takeover in it, because that's the way they typically trade. They basically they have 2 or 3, one big day, maybe 2 to 3 days of further jockeying, but then it just kind of turns into a neutral do nothing stock. And if you were lucky enough to own the stock prior to the acquisition, it's generally just best to take your profits and not look the gift horse in the mouth.
Well put. Okay. Sarah, let me bring a couple to you. And again, reminder to everyone in the audience, please feel free to drop us stickers. Again, they are there's a post up top where you can go ahead and you can drop. Sarah, I saw you posted a little bit more stuff on QQQ. Did you want to touch anything else on that before we go into other tickers?
No, I realized I accidentally posted NQ instead of QQQ, which, I mean, it's basically the same chart, but obviously the levels are different. So I posted QQQ below on that same thread is all.
Okay, sounds good. All right, so we do have a couple others that came in that I'll throw your way. One of them was TWI, and another one is AMD.
TWI. Let's see. I don't know what that one is.
That is Titan International, and it's
Woo.
been having a bit of a run.
Yeah. Let's see. Huh. It looks like it. Wow. This chart, let's see. On the I'm starting at the 12-month chart. So it took out its 2018 highs. What's the next level? 1996. Wow. Man, this thing's just going. Month. It hit its nearby targets and did its job at like what is that? 1450. The next level I would keep an eye on is 1720, and then 20 psychological. Let's see, the weekly could stand to get a little pullback on the weekly. So if you close as an inside week this week, and then next week you break this week's low, so you break the inside week and down, I would probably exit if you're long and wait to get back in on a basically a bull flag on the weekly. We call it a rev strat, which is an inside bar, and then the next candle would be a 2 down, so break the inside low, and then you would want a 2 back up. But you've got full time frame continuity is green on, every time frame, quarterly, monthly, yearly. The daily, you have a bullish outside bar today, so they're still interested in this name. Low 1441, 14. So see, today you broke air quote support by 1 penny, and then they just gobbled it up. So still it's looking strong and bullish.
Perfect.
Hold on. And then AMD went outside week. I know it had, what did it have? Bad news, a downgrade or something?
I'm not totally sure.
I believe it did. Hmm. And like I said, so this is one of those things, like we're at the end of the month, so it's a weird time to try and be getting into positions. You want to let April open and see what they want to do. You have a bearish outside bar this week. It's a pretty strong candle. I don't know. You got to wait and see what happens next week.
Okay. Brian?
Yeah, AMD, I just like to chime in there because I've had an eye on this one. It still has a declining 50-day moving average, which tells me don't trust rallies. And this week it came, almost precisely to the volume weighted average price off of the all-time high, was unable to close above it. So this selling to me shouldn't come as a surprise. It's still what I consider to be guilty till proven innocent. And I'll post a chart of that because I have it up right now. In just about 30 seconds.
Okay, awesome.
Can I add one other thing?
Yeah, of course.
This was a great retail trap, I feel like, because yesterday it broke its resistance level. So it basically took out its target and then failed and went outside bar. So if people aren't aware of outside bars and what they are, they completely engulf the previous candle's high and low. So that yesterday right there was a big red flag, and it looks like somebody knew this was coming. It just looks, like shenanigans.
Understood. Yeah. Somebody smart took advantage of the situation.
Yeah, because you broke that 124.61 level and then just sold off the rest of the day. Yeah, somebody knew this was for sure a trap, I feel like, but that's okay because the price action will show and tell you this. You just have to recognize what it's telling you. and not be like, oh, it broke resistance, I'm going to stay long, regardless that the chart's telling you get out.
Right, that makes sense. Okay, Richard, I'm gonna throw a couple over to yourself, and I hate to do it, but let's do Bros in Google.
Sure. So let me go ahead and bring up those charts. All right, starting with Bros, looking at a daily chart, we had a nice move on that Tuesday, 329, but then the next day, we basically opened down a little bit, tried to fall through, and then ended pretty much right at the open. And that to me tells me that the sellers kind of took control there into the end of the day. Volume was pretty high as well, not quite as high as the breakout attempt, but also quite above average. And then today we just kind of fall through that prior day's low, that Wednesday low, and now we're basically trading not quite at the lows, but definitely in that lower third. To me, not a great sign. We've got some potential, areas of interest here. The 21 EMA down at that 55 area. We've got the low of that breakout candle, and that's at 56.08. So just needs to reset here. Nothing really of interest here. You could have shorted through yesterday's low today, but nothing doing to the long side right at this moment. Just got to wait for that to reset, maybe form another handle tightness consolidation. Looking at Google, let's go ahead and bring that chart up. Like a lot of the mega caps, are really strong off the bottom, bunch of days green in a row. But now we've got some profit taking coming here. Definitely a negative candle today, right at the lows as of this moment, broke through yesterday's low. And I don't like that kind of little gap up and then kind of candle. The day I'm talking about is 329. We had a gap up, then kind of basically a hesitation close pretty much right at the open. And then it's kind of been kind of weak ever since, and maybe a retest of the 200-day moving averages in order. That's down at 2778. So definitely, once again, not much to do on the long side here. You could have shorted sometime in the past 2 days, depending on your edges. But the overall chart, is in a kind of intermediate uptrend. We're above a rising 21 EMA. We're back above the 200 SMA. But in the short term, nothing much doing. You just got to wait for a spot where you can manage risk. That's the most important thing. So yeah, that's kind of my take on Bros and Google. Not much to do on the long side for either of those as of this moment.
Okay, awesome, Richard. Thank you.
Yeah, and Bros ended up losing, right?
Unfortunately, Bros did take the L in the first round.
Yeah, it's all good.
Can't say it didn't put up a valiant fight. And hey, we've had a lot of upsets, so you just never know what's going to happen.
Yeah, I mean, I'm a fan of Google, YouTube. I watch a lot of YouTube every single day, and obviously I post a lot of videos, so can't hate on Google.
There you go. The quick plug. Yeah. Make sure you're checking out Richard on YouTube. He puts great stuff out there. In fact, all the speakers on this panel actually have fantastic content off of Twitter as well. Yeah, I definitely wouldn't mind giving everybody a couple minutes on that as we get a little bit, maybe like 10 minutes from now, more into this. But for anyone that's listening, if you're hearing the tidbits here and you like it, I know that Brian and Richard and Sarah all put tons of content elsewhere. There's for sure links in their bios, and they're all incredible people to be following on here. Obviously, they have great audiences, dedicated audiences, and engaged audiences, and they've been doing this for years and years, some with more experience than others, but all with a very balanced approach to the market and a real want to help retail. So I'd say take advantage of that. All right, a couple more over to yourself, Brian. So somebody asked about potentially going short on SWKS, and then the other one is Shop. You might have to unmute, Brian.
Oh, yeah, you're right. Thank you. I was talking and heard you say that. So good. I'm happy to hear somebody asking about SWKS as a short because it has a declining 50-day moving average. And, I posted one about that path today, and someone said, saying, stocks below declining or with a declining 50-day moving average are guilty till proven innocent. Somebody said, well, where's your crystal ball? Why didn't you say that earlier? It's a concept I talk about all the time. And in this case, we have a declining 50-day moving average. It spent, it closed above it 2 out of the last 3 days, but it's still declining. So it's more important is the direction of the 50-day moving average. And in this case, again, it's down. And we also came up to on today's Wednesday. So on Monday, it came right up to the year-to-date volume weighted average price and closed right at it. And now we're back below it. So I think that as far as a short goes, a worst case stop I'll start with is risk management. Absolute worst case stop would go above the high this week. So the high this week is, on Monday, and that price is 141.26. So I would say, a stop of 141.30. The problem with that is it's 6 points away, and I don't like 6-point stops. So I might even say, half of the stop above today's high. Today's high 137.30. So I'd say maybe 137.35 for half of the stop. Because today's high also occurred right at the 5-day moving average, which is just flattened out and has trapped it underneath. So if it gets back above that, it kind of turns a little bit more neutral. I wouldn't yet have a full position short in SWKS because the volume weighted average price off of the low from March, which was on the 14th, is right now at about 138. 132 rather. 132 and a half. So, on initial short, if you're short at here, be aware that 132 and a half, 133 is likely where it will at least pause and maybe look to cover some or all of it. And then if you got to bounce back up to 135 and it starts to roll over again, I think that next rollover would lead to a bigger decline because then the volume weighted average price off the March low will have been flattened out, meaning the average long is now kind of questioning whether they should be long. The average short at that point would also be looking at it and saying, now we're in control. So if it were to come down to 133, look to cover some. As it bounces back up to 135 and a half, 136, look for it to roll back over and short it on the way down, perhaps near 134. And then I think you could see the bigger picture unwind and come back down close to the lows for March on that short. And as usual, I was looking at this chart, not paying attention to the second symbol. Sorry about that, Gav. What was the other one?
Shopify.
Shop. Okay, Shopify has had a big bounce, and here we have a stock that has bounced, and a bounce is different than a rally. A bounce is, it bounced in a downtrend. The primary trend is lower. On Monday, it came up and tagged the declining 50-day moving average, and that was the exact high. It's also below the year-to-date volume-weighted average price. As you know, or as people know, I'm a fan of the phrase, if they don't scare you out, they'll generally wear you out. And, this stock is down from 1,700, hit 550 or so, but that, it hasn't been a deal all the way down. And I don't think it's a good place to purchase now. I think it's getting ready to roll back over. In fact, the volume weighted average price off the 14th, off of March 14th, which was the low for this one as well, was hit last week. We got, and that brought the bounce up to the 50-day moving average. Now we're coming back down. I think, back below 660. It's probably going to head back down under 600. I would be more interested in looking this as a potential short sale in the near term. And again, if they don't scare you out in that horrific decline, they'll typically wear you out. Stocks typically don't make a V bottom. Instead, they're going to take time to reaccumulate the big funds. People always talk about big money is smart money. And and it's not to pick on Kathy, but we all know what she did with Palantir. Palantir, she bought it every day on the way up and sold it almost pretty much at the exact bottom. And new fund holders come in, they get that 30% bounce, they start selling it and look to replace it lower. So it's a process of accumulation. It's not a quick turnaround that's typically going to occur. This one, I've referred to it before as, you drop the basketball from the 20th floor, the first bounce is going to bring it up to the 12th floor. Next time it comes down, it comes down with less force and the bounce is less powerful. It bounces up to the 8th floor and then to the 4th floor on the next bounce. And then it kind of just dribbles out and people forget about it. And that's kind of the same story with stocks, is they will take a lot of time to undergo that accumulation. Maybe Shopify is the exception, but I'm not looking to trade the exception. I'm looking to trade where the odds are, and odds say, don't buy this one.
Okay, awesome. Thank you, Brian, for the insight there, and also the nice little quote. They don't, what was it? If they don't wear you out,
If they don't scare you out, they'll wear you out.
Boom. There we go. Love to see it. Put it on a postcard. Okay, Sarah, thank you for sharing out the space as well. We do have some more being commented. Let's take a look at Uber, and then in addition with Uber, let's see what else is being commented on here. And thanks to those that are commenting. Again, it is one of the more recent ones on my page, so you can go ahead and find it there. Let's do Uber as well as TTD.
Okay, cool. Let's see. Starting with Uber monthly. From a monthly perspective, where I love where it bounced at, or like where it hit, because we took out an outside bar monthly pivot from August of 2020. So that's always my goal, is take out a pivot low. And especially if it's an outside bar, they just mean more. So we took out 28.48 this month, which was awesome. And then that's where we started seeing the buying. Weekly is looking good and green. The daily, I mean, this thing, so if we start April green, I would definitely want to be long here. It's like it's so hard to explain the strat. We took out the pivot low. We have a nice daily uptrend. I don't have moving averages on my chart, but if I did, I would guess they're probably starting to point up. So this is something that I would look to get into. Yeah, I don't know what their time horizon or anything is, but if they wanted to wait for a weekly pullback first and then re-enter so you get a nice stop, because right now on the weekly chart, there really is no place for a nice stop. We've just had 1, 2, 3 higher lows for the past 3 weeks.
Okay.
The daily, I mean, there's a lot of spots to put your stop on the daily, but I don't know what their time horizon is. But
how about TTD?
TTD. Okay, so the monthly took out its objective low, which was at $55. So that's good. So we took out January's pivot low. And then that's when we reversed, because that's usually always what happens. You take out support, then you reverse. The problem is you're going to open right in the middle of the month. If the person who asked this is looking at the monthly chart, I really want them to focus on that January candle, because February, you're just stuck inside this giant bar. So it is a bit range bound sideways, and they keep closing it right around $70, it looks like. Oh no, never mind. Ignore that last comment.
Anything else on that one?
Looking. I really wished it would have taken out. So it took out 55. It would have been nice if it would have took out 46 too. That would be really comfortable going long there. Yeah, I mean, this chart though, I feel like this chart is not a great name to be trading. And there's a lot of other good stuff out there that's more clear. Like I said, this has pretty much been sideways for 3 months. I don't know. It's
All right.
not
Well,
something.
no worries. Yeah, they're not all super straightforward for sure.
Well, and
Okay.
that's the thing too, like look for clarity, don't pick a name that is hard. You can usually find an easier setup somewhere else. Sometimes though, people just get kind of married to a ticker and just always want to trade it, even when maybe they shouldn't be.
For sure, people get way too attached, and agree with that. It can certainly hurt them in the long
Hmm.
run, because sometimes it'll work the first few times, and then you kind of ignore the red flags and just keep rolling with it. Although it can have pretty bad effects.
Oh yeah, especially those Twitter hype names, like
For sure.
Lucid comes to mind. People always want to trade that long, and it's, just it hasn't been set up to trade long. It's been a short for a long time.
Yeah, yeah, definitely a great point. That Lucid is one, among others, certainly. Okay, awesome. I got a couple more here for Richard. We have about 10 minutes left, so we'll do maybe one more round and just do some closing commentary. We do have a hard stop at 3. I am going to keep the space open. It's just going to transition into more of a different topic. So, Richard, 2 more for you here. And also, and then I'll kind of work some stuff into the closing comments here. But again, if anyone hasn't already clicked into Richard, Brian, and Sarah, throwing them that follow, you're definitely missing out. It is certainly worth your time. They put a ton of charts out on a daily basis, live trades, and much more. They have YouTube channels and a ton else besides that. Stock Market News is fantastic too. My co-host on here, so don't be missing out with some incredible people that are on here. So Richard, a couple that stood out to me that were commented. This one came in a couple times, which was SST came in a couple times, and then in addition with that, Snow.
Okay, SST. Yeah, this is actually one I haven't even looked at yet. Taking a look at the overall chart, we've got an uptrend since its IPO, and now it's pulled back, drifted down, and is kind of compressing against its 21 EMA. So you've got kind of a big pivot, 15.55. Also, this past Tuesday, that high stands out to me, 1530, and you can put a stop at 1430, which is yesterday's low, if we do get a push up upwards. But looking at the overall pattern and kind of the character of the stock, this one is pretty choppy up and down. So kind of what Sarah was saying, this might not be the easiest one to trade. It has a lot of wicks. It doesn't like to close at the high, and overall is just kind of choppy. This is probably some type of SPAC or something related to that. It opened near 10 and that type of thing. But yeah, I know nothing about this company, but just looking at the chart is a little bit tough to trade here. Yeah, looking for a push through kind of that 15 level. On the short side, obviously, you've got pivots to the downside as well if we start to trend downwards. Looking at Snowflake, bringing up that chart. This one is still below declining 50-day moving average. We're below anchor VWAPs from the high as well. It looks like we actually just managed to push above the anchor VWAP from February 10th and potentially find support at it today, but still below that declining 50-day. So that gives me a little bit of pause here. We're above the 21 exponential moving average. So just kind of chopping in a little bit of a range here, and just needs to prove itself. I think there's stronger stocks and better uptrends, cleaner trends, and this just has a lot of work to do, a lot of overhead supply to work through as well, and we're below that 200-day moving average. So yeah, for me, this is another name that's kind of hyped a lot with PLTR, all those names, but sometimes the chart just isn't set up, and this could go sideways for a few months, then start a new trend, or it could just go sideways for a few years and never really break out through those previous all-time highs. So just be patient with this one, and it's still in a downtrend at this point. So nothing much to do looking at this chart.
Okay. Maintaining patience. That's on Snow, right?
Yeah, on Snow, yeah.
Okay. Awesome. Thank you, sir. All right. Brian, I think we're going to do one more Brian, one more Sarah, and then we're going to leave the last 5 minutes just for some wrap up. Brian, thoughts on Jack? That's Jack in the Box.
Okay. This is looking pretty constructive. First thing I'm looking at is a weekly chart that goes back to 2017. And, there's been, this is a perfect example of if they don't scare you out, they'll wear you out. This thing was, basically $100 a share in 2016. And then, it dropped in 16, 17, 18, and into mid 19. It finally made what looked like a low near 5, went sideways for about 8 months, broke a new low, went sideways for another year and a half. So again, if they didn't scare you out on that big decline, they probably wore you out, as it took 2 years to start turning higher again. And we're finally back above the rising 20, 30, and 40-week moving average, which is, of course, the 100, 150, and 200 day. So then going down to a daily time frame, we're above the rising 50-day moving average as well as the year-to-date volume-weighted average price. Now I'm looking at this daily chart, and one thing that concerns me is, the average daily volume of the last 20 days is only 106,000 shares. So it's when you have low liquidity like that, they tend to be a Roach Motel, easy to get in, but you go to get out and hit the bid, they start widening the spread real quick, and you kind of feel trapped in there. So near term, we're holding above the VWAP from the February low. That's good. But if it breaks down below 1350, I think you'll see a test of the 50-day moving average at 13. So I'd say that if you're okay with these illiquid stocks, it's kind of neutral here on the intermediate term between 13.5 and 15.5. So there's no hurry to get involved, but longer term, it's constructive and looks like, if it can prove itself out over the next week to 2-3 weeks, then it might be able to gather up enough energy to push higher, and start making some headway back into new multi-year highs. Going back to Uber real quick, I don't know if you guys have seen this movie, Super Pumped, or it's a TV show on Showtime about Travis, the CEO. Real entertaining story.
I have not seen it, but I've heard interesting things about him in the past.
Yeah, it's pretty cool. It's. I think they're on season episode 5, so it's a new series, and take a watch. It's pretty interesting about the background of Uber, and their CEO's quite a piece of work.
What'd you say it was called again?
Super Pumped. It's on Showtime.
Perfect. I'm gonna watch that. Thanks.
Perfect. Okay, so we have about 5 minutes here now. Again, everyone, just a reminder, there's going to be a very large base taking place in about 5 minutes. We're going to remain on this link, remain open. But I do want to give each one of my speakers a minute or two now just to kind of talk about, besides this, right, you're there on Spaces, but they also do a ton of other stuff. They put out content, they have live trading and all of that. So Sarah, where can people find the rest of your content, what you're doing on a daily basis? How can they follow along?
Yep. So I'm part of a Discord community with I call him my play son. His name is Alex Options. Smart whiz kid. The link for that is in my Twitter bio, so you can find me there. We do make you pass a test, a strat test to get in, though, which is pretty cool. But, we want people to have some understanding of the strat, even if it's just the basics. That's pretty much all we're asking. And then, on YouTube, I've got a YouTube channel. I have a Stratucation playlist, which is where I made a dedicated playlist just for the strat principles. So if you're looking to learn it, you can go on my page, my YouTube page. The link is also in my Twitter bio. And then go to playlist and then find the playlist called Stratucation. And that's where you can learn all about it for free. There is courses and, there's so much information on the strat. It's basically just a simplified way of viewing price action. Unobjective, it is what it is. It's an inside candle, it's an outside candle, it's a 2 up, it's a 2 down. We're just identifying what we're seeing and trading what we're seeing instead of predicting. And I, tweet on Twitter, post charts, answer questions, all that kind of stuff.
Perfect. So cool. Sarah, thank you so much for coming on, and we're going to be doing definitely more with you.
Yeah, thank you for having me again. I'm super excited and happy to be here with you guys.
Absolutely. All right, Richard, same thing over to yourself. Richard, you have some amazing content on YouTube. You've been ramping it up, I've seen, as well as your newsletter. Where can people find this stuff?
Yeah. So yeah, thanks. If you just click my bio, I think I've got my link to my YouTube channel right there. And my favorite thing is interviews I do with traders who I respect and like to learn from, including both Brian and Sarah. I've done interviews with both of them. Really great education in my opinion, in my personal opinion. I learned a lot from it. So yeah, that's my favorite thing to do. I've interviewed hedge fund managers, portfolio managers, the U.S. investing champions from the past 3 years. All of it's completely free on my channel. I think the link is called um, Interviews with Trading Champions or something like that. But highly recommend it. I've learned a ton. It's definitely shortened my learning curve. Also, I've got my Substack where I post weekly articles, and outside my own YouTube channel, I also run the Traderline YouTube channel. And between mine and that one, I do about 5-6 videos a week. So yeah, you can check out the stuff there, trading concepts, interviews, all that stuff. Yeah, that's pretty much where you can find me.
Very cool. Thank you so much for coming on, Richard.
Of course, my pleasure.
All right, and Brian, cap us off. Where can we find more of you?